Ifan from the Strategic Day Trader, and this is your market wrap for April 23rd, 2019. Q's up 1.27% there, SPY zero point 0.9. Trend day up all day on the Q's and SPY. Uptrend remains. Not that surprising, right? We talked about yesterday how we've been in a bullish uptrend for almost a month now, and we continue to maintain this uptrend. We can look for acceleration, for potential exhaustion in the Qs and SPY. Doesn't seem to be there at the moment. Just an uptrend all day in the Qs and SPY. The bullishness remains. I know it's more exciting to talk about when this can come in and how much it can come in, but I do think the only responsible thing for me to do really is to go with the chart, read the chart as objectively as I can, and make sure that we follow what's going on here, right? So it's probably more exciting to talk about potential recession or overbought and lots of things that will get people's attention and maybe incite some kind of fear. But we've been bullish for the last 4 weeks, and it's going to stay that way until we get some kind of acceleration, until something changes. Wouldn't be surprised we get a pullback tomorrow, maybe to retrace some of today's rally. Okay, but the bias on the short term and the long term remains bullish. Okay, pretty straightforward here. That's really all we can be, and you can see the market continues to move up. And so we'll see if we get either acceleration tomorrow to the upside. That would increase the likelihood that we could put in a top, but we'll have to wait and see. So going into tomorrow, for now, we're going to be bullish on a pullback. Especially would be better now that we are extended on the hourly. All right, so I do want to get into a topic, just something that I thought came up today in the room. I do see it quite often, especially when we have open house or if we're running a promotion like we are currently, where new people come in and they look for breakouts and breakdowns, because I think breakouts and breakdowns are probably the most commonly referenced entry patterns, or some kind of like entry point, because I think it's well understood, right? You go to a new price higher, that suggests that we're breaking over resistance in some way, right? So I see that a lot, and our definition of breakout and breakdown is very specific. Okay, we want 3 or more, preferably 5 or more bars, basing, consolidating, and we put the entry over the top of the base on a long and below the base as the stop, and below the base is the entry for a short. So something like this, right? The longer it bases, the better. If you have a rising 20 MA, that's in the context of an uptrend, right? I think it's very clear to see this as a base and a breakout, right? We get a breakout. It was about a 10-cent stop, right? That went I don't know, 70 cents. All right, so it was a big move there on the CIT. So this, and you can see it was setting up another base here, but I think we kind of just never triggered and then ran out of day there on the CIT. Okay, but what happens, what I see a lot of things get mentioned are things like this, which are like a new low, right? So they'll say, so I'll get this kind of thing where it's like, oh, WHR is breaking down. Like something like that, where, okay, it's going to a new low. And a lot of times when it's this many bars down, right, that's going to be the bottom. Now, I don't think anybody was necessarily saying that WHR, let's enter it all the way down here. But I do kind of see stuff like this get mentioned as it extends lower, and what ends up happening is you kind of end up shorting it at the low just because it made a new low, right? So I think this differentiates for us the difference between new highs, new lows versus an actual pattern, right? Things can make new highs, new lows, just like this, right? Running up to make a new high there is not going to be a breakout pattern, right? You saw what the CIT looks like, right? And just like this, just because we come in and break yesterday's low, doesn't make for a good breakdown pattern because we don't have equal highs and equal lows, right? We're moving, we're just kind of pushing up and down. Okay. Another one that we saw, or that I kind of saw today that was mentioned, is something like, this VIPS, which is already started the move, right? We're not moving sideways. We're already moving up. We're already moving up. So when this, right, goes to make this new high, right, often that's the top. And so you end up buying at the point where other people who bought it on the pullback are selling. So that's why you don't get follow through. All right, let's take a look at an example of a breakdown. Okay, so hopefully this will help kind of reiterate this point again. So notice here, right? Look at these bars here. Okay, we have equal highs, equal lows. We're going sideways. We're consolidating. You can even compare this, right? What is price doing while this 20 MA is pointing down? So the only way that this must have caught up is that this went sideways, right? So a base or consolidation or price going sideways, that's our breakout, that's our breakdown. What we don't want, and what I hope for some people who use breakout, breakdown is just a point in which price reaches a new high or new low, can kind of take away from this, is that if you've already made the move, if you look at the chart and the chart is multiple bars down, right, into that new low, that's not necessarily a good short point. Notice how, again, this one, that break of those new lows into those new lows, if you shorted that, you're shorting at the bottom, okay? Where this is consolidation, right, may not be completely clear because it is going to be into the previous lows, some support there. But that is much more likely to give you nice follow through than just an arbitrary new low, new high. Okay, so just something that I saw today, and especially because this CIT, which was maybe the play of the day here, and setting up a nice base breakout, right, on the CIT, that for what our methodology, right, breakouts, breakdowns are going to look like this: equal highs, equal lows, consolidation, and then we break out from it, not just the extension or the run up to a new high and new low. So breakdown and breakout, there's no, I guess, necessarily right definition. I'm not saying that any other variation of this definition is wrong, but this is our definition. At least 3 bars of equal highs, equal lows, the more the better, okay? And that goes for time and number of bars, right? So those are going to be the same thing. Okay, so like something like that CIT as a nice breakout. And these are both 5-minute. You can find more in the 2 and the 1, right? These are just 5-minute ones. Just want to pick a breakout and a breakdown, both on the same time frame, and then you have your breakdown here on the PG. Okay, all right, so hopefully that is clear. I mean, even here, multiple bars down, right? This is not, just because it goes to new lows, not the point you want to enter. We actually did have a play on this PG. We shorted it on the sell setup here, and then it did make new lows that got to target, but then the back half didn't work. You can see the big pop up here that took out the stop. So the front half should have made money, back half wouldn't have worked. But so this is going to be something different, right, where it moves up and then on the retracement. So really, those are the only 2. Everything else is a variation. Either it's a retracement play or it's a consolidation base play. Look at that base there. See? There's another one on the 2-minute there. See, at least 3 bars. We have 1, 2, 3, 4, 5, 6, 7 bars of consolidation, and then the breakdown, right? And you can compare the amount of follow through, how many bars are going to follow through after a base like that versus just something going to a new high or a new low. Okay, so that is the breakout breakdown. I think most people, maybe the majority, I think probably majority of people have a variation or a breakdown breakout play in their toolbox, right? And I just wanted to show you, kind of define it for you based on just a couple examples from today. Okay? All right, so hope you did well today. If not, we'll be back at it tomorrow. We still are at the very beginning of earnings season, although things are starting to show up. We are starting to get some nice follow through. Today, with the market being as strong as it was, a lot of longs got some nice follow through. But we'll see what else we get moving forward. Should be another healthy list of earnings for tomorrow. All right, and so we'll be back at it then. Hope you have a good evening, and I will talk to you tomorrow. Good night.